Will the 2020s, the next decade, be the commodities decade? Well, there is some evidence that that could happen. So, what are commodities? For those who don't know, commodities are precious metals, gold, silver. There are also other commodities such as oil, gas. Is basically commodities are finite materials that are just pulled out of the earth, and commodities tend to go up in times of scarcity, in times when stocks are underperforming, in times of political unrest or geopolitical issues. People tend to want to buy gold as a safe haven. In times of war, oil becomes extremely precious, energy becomes extremely precious, materials become extremely precious. So basically, a commodity is something that comes out of the earth and it's refined or raw and you can hold it in your hands. So why am I talking about the 2020s being a possible decade for commodities? It's because basically the 2010s have been a decade for equities, for stocks. And when stocks tend to go up, there's an inverse relationship between stocks and commodities. So now commodities have had a lost decade in the 2010s. Now, if you were investing back in the 2000s, in the decade previous, we had a lost decade for equities, and then we had a great decade for commodities. Gold went up, oil went up. They all had a really great decade. And what I see in the 2020s is now we're going to revert back to possibly stocks having a lost decade and commodities having a great decade. If you look at right now, it's the spring of 2018. We see some geopolitical issues in the Korean Peninsula. Syria is essentially becoming a proxy war between several different nations. If these geopolitical issues continue to unravel, then oil gets disrupted in the Middle East. Energy becomes more precious. People are going to be more likely to want to hold gold and silver again. And another issue is that people just haven't been thinking about gold or silver because they've been thinking about stocks and crypto. And usually when gold and silver kind of sleeps for a decade or so, people wake up and discover, oh, gold, let's go buy it. And I mean, gold had a almost 20-year bear market from the early 80s to the late 90s, and when it exploded, it really exploded in the 2000s, and it's really had a lost decade now. So how can you position yourself to gain from this? So when it comes to commodities, actually one of the best strategies that you can use is to buy stock in a company that gains when the price of commodities rise. So that can be oil and gas companies, mining companies, gold and silver mining companies, copper mining companies, companies that have business that deal with precious metals. Also, you can look at currencies that are tied to commodities. That would include countries that have that are net energy exporters rather than importers. So they're selling oil and gas to other countries. They're mining a lot of gold and silver. The example of these types of countries are the Scandinavian countries like Norway, Finland, Sweden. Australia is a huge mining country. Those currencies tend to rally against other countries like the U.S. dollar, that is a commodity importer and an energy importer. You will see the Canadian dollar rise against the U.S. dollar. Canada obviously is another country that has a lot of oil and mining operations. So you can look at companies that are tied to commodities, oil and gas refiners, mining companies. You could also look at currencies where those countries are net energy and commodity exporters. Another thing you can do is look at ETFs. Instead of buying the physical gold, you could look at ETFs like the GLD or the SLV or the USO, that's for oil. If you are concerned that the GLD and the SLV don't actually hold the gold and silver, you can actually look at CEF, which is the Canadian, it's sort of a Canadian pseudo ETF. It actually holds the physical gold and silver, and you can use that ETF as a way to sort of hold gold and silver without actually holding it. So another strategy you can look at if you don't want to invest directly in commodities or energy companies is look at alternative energy companies or companies that are looking to manufacture solar panels or electric cars or other companies that actually benefit when the price of oil and energy go up. So obviously like a solar city or something like that. Now, another way you can also profit from a commodities boom is to actually short companies that are dependent on the price of commodities in order to function. So, for example, airlines. Airlines, their profitability is very much tied to energy prices. If fuel prices go up, that cuts into the profit margins for airlines. Trucking companies are very, very, very dependent on fuel when they factor into their profitability. Transport companies that have to transport stuff, companies that need fuel to do their job, like FedEx. So that's another way you can play a possible commodities boom, which I think is going to happen in the next decade, in the 2020s. So I hope this video was useful. If it was, please be sure to like, share, and subscribe. Thanks. Bye.